Why now when there's so much uncertainty? I just brought you that headline from the Journal suggesting that Beijing is far from done with its crackdown.
Yeah, thank you for having me here today. If you think about Chinese equity as an asset class, it has evolved and developed tremendously, especially in the past decade. So Chinese equities, not only one of the largest asset class in the world by market cap, together about 16 trillion. It also one of the most exciting and interesting investment opportunity from the bottom-up perspective. So we continue to see that the long-term investment case on China equities remain unchanged. And in addition, the accessibility to Chinese equities for the global investors continue to broaden and to open up. So you probably heard of that now. Global investor can access domestic two stock exchanges, Shanghai and Shenzhen, through the Connect program. So we believe the further opening up of domestic markets will make China become even bigger representation of the global indices. So for example, within MSCI EM, China accounts for about 35% of the weighting, and at one point was as high as 40%. So despite the certain developments in recent time, we believe this long-term investment case on China remains unchanged. And in the same time,
sorry to interrupt you, Vivian. I'm just wondering, what is your strategy here? Is it a little bit different? Are you investing in some of the big tech names that we talk about all the time on CNBC, like Alibaba and Pinduoduo, JD.com? I'm looking at your top 10 holdings from, I think, another fund, and they're more connected to the government. They're names that we don't talk about as often. So is this a play on sort of government regulation, the companies that perhaps Beijing is taking stakes in and helping to become winners at the expense of others?
Yeah. First of all, yes, we do invest into across the board all Chinese equities, including the ones listing outside of China. But the timing of this launching actually not really related to what you just mentioned. As I mentioned earlier on, that this is the long-term evolution of this asset class and the natural evolution of our own investment capabilities perspective. We've been having the China investment since the late 1990s. And then in the same time, we launched the dedicated China domestic strategy back in 2013 and recently 2018. So on the topical level, it sounds like the timing is interesting, but actually this has been a very natural evolution of what we have been thinking about this investment case and also the asset class.
Vivian, you mentioned MSCI EM, and there was a period not too long ago where pressure was on them from U.S. politicians to distance themselves from Chinese equities. Are you saying that that political pressure domestically is going to abate and not come back?
It's very difficult to predict from the political perspective, but I would say that MSCI, looking at the market mechanism and also the evolution of the asset class from the fundamental perspective and also holistic perspective to look at the importance of the weighting of a certain country. So I believe from that perspective, as I mentioned earlier, Chinese equity as a whole remains attractive and unchanged. We will see that how that MSCI inclusion will continue to evolve from this point onward. But I believe fundamentally speaking, it will be aligned with the same kind of thinking as I just mentioned about the overall Chinese investment case.